Yo, bro, what date's today?
Spread up Sunday, baby.
You already know. Let's go. Yo, welcome back.
Yo, what
Bread Up Podcast. We a little bit of a delay. It's not Bread Up Sunday like it usually is. It's a Bread Up Monday today. But we've been busy doing other projects. We're in the middle of shooting a film right now.
Yep.
So we kind of had shooting yesterday. We couldn't have enough time doing a video and a podcast today. But don't worry about it. We're one day late. We'll be on time this upcoming weekend.
Yeah, it's a Monday, but you're probably expecting it to come out Sunday. But we had to do what we got to do. We're going to get it out right now. And today's topic, we want to just go
I'm not going to lie. We were going to be on time, but Julian did wake up kind of late on Saturday.
Yeah, I kind of blew that one.
You kind of blew that
my
one.
Bad,
Hey, to your defense, you did wake up at 6:15, but then you did go back to sleep.
Yeah.
So it's okay.
But we're here. I'm here now, and we're going to get it out.
We're back at it. But Julian, what are we bringing to them today? What's our gift?
So something that I really wanted to talk about is a topic that I think is really important for anyone who's going to be investing into the stock market, and that is just looking at the prices of stocks in general. And I think that a lot of people get a little scared off at the prices of certain stocks like Amazon, like Apple, Microsoft, Nvidia, some of these amazing companies.
Because they're worth hundreds of dollars, and you get intimidated as an investor.
Like if you buy one share of that, that's going to cost you $500.
Sometimes people whole portfolio is $500.
Yeah. So a lot of times people are like, oh, I can't afford that stock. I'm going to buy a stock that's maybe $10, maybe $5, and that this is some mindset that we want to talk about on how the stock prices, they don't matter at all, really. When you go to invest, you're not supposed to be looking at the price. That's not what's determining if you should buy
I think it's
or not.
important to know that it doesn't matter in the long run if you're a long-term investor. And we'll talk about different horizons. Like the price of a stock really shouldn't matter to you in certain situations.
Mm-hmm.
And we'll talk about that today. But first off, because Julian, you're bringing this topic in too. You're really the one that brought the topipic in today to the podcast. Yeah. What's the first thing that brought you to it? What made you start thinking about this?
A lot of people, like a lot of friends, family, who are starting to maybe start investing, I told them, buy Apple, buy Microsoft, Tesla, Amazon, stuff like that. And as soon as they go to look at that price, they're, whoa, that's too expensive for me.
They're like, that had that spike already. It's already expensive,
And that's what I'm saying. Like, that shouldn't even be a question in your mind. You should have the money, and you should be, looking at the stock and looking at the company itself, and rather than just looking at the price, because the stock and the company itself is what determines the future and what potential profits you could have. And Amazon, if you don't have $3,000 to buy a share of Amazon, which even one share of Amazon is not the best investment to make. We suggest buying 10 shares at least.
10 shares, exactly. Like, if having one share of Amazon won't really do you too much justice. One share of Tesla, maybe Tesla because it's so volatile. But the point of it is, if you're going into those types of high, large cap tech stocks now, because usually old tech stocks is the ones that are the most expensive, but large cap stocks nonetheless, you have to buy in bulk, really. And because you're buying in so much bulk, it's thousands of dollars. And this is meant not for the not enterprising, it's the beginner investor, like us. Like, for example, I can't buy 10 shares of Amazon.
Yeah.
Others can. But if you can, at that point, the stock price of those companies, like, to get to what you're saying, to kind of understand it, doesn't really matter too much.
No. Because
of the valuation of those companies.
Yes.
Because they're still, I think now it's still in its infancy, how powerful these companies are going to be. Like the Amazon, already most powerful company in the world, and it's continuously going to grow, just like Apple. I think the same thing is Samsung, Nvidia. These are companies that are continuously going to grow, even though they're already large cap stocks. They're going to grow more. So is that kind of why you say that price doesn't matter?
Yeah, exactly. And I'll go into a little bit more on like ways to afford higher volume stocks, more quantities of shares at a lower cost. If you can't afford to buy 50 shares of Apple for thousands of dollars, there's other ways to go about that, like we could go into. But bottom line is, when you go to buy a stock, you shouldn't get scared away from the company based on how expensive the stock price is, because it's honestly, the more expensive the price is, it's really shows that company is more valuable and is a better investment.
And really, one thing to note about stocks is the actual dollar price of what it is worth now is not what it's actually worth now. It's what people think it will be worth in the future. So yes. Amazon's stock price 3 years ago is what it's worth now, maybe 4 years ago, 2 years ago, whatever. Point is, it's years down the timeline. The whole stock, that's why you think that when we had huge amounts of unemployment, we were rallying in the market. You might have been like, what's going on? The stock market is not reflective exactly. It's kind of, but in the short run, the stock market is a voting booth. In the long run, it's a balance.
Yeah.
So in the long run, it is completely reflective of the economy. Short run, it's not. So that's why stock price, if you're a long-term investor, if you're trying to build a portfolio that will stand the test of time, and stock price doesn't matter. Because whether tomorrow it goes down 10%, or up 20%, you're not selling out next week. I think that's important to talk about investment timelines or horizons.
Yeah. It does depend on what like we talk about it all the time. Every action you take in the market, have a goal behind it, and what matches your goals is going to be different, for other people. So when we go into these stocks, looking at these prices, if you're planning on day trading or swing trading the stock, this example doesn't really apply, because your goal is to sell that stock within a week or within a day. And what we mean by this is, really in long-term investing, is the stock price is not going to matter. Apple, Amazon, these companies, you have to be able to afford to buy at least 5 to 10 shares of these companies.
Yeah, it's like, if you're buying it now, right, you're going to kick yourself for not buying it in a month from now, in 3 months from now, in 6 months from now, because that's how it was in the beginning of the pandemic. Everything was dipping. Everyone was going haywire. It was mayhem in the streets. And everyone was kicking themselves by June because everything was up for 50%. Mm-hmm. And it's all about your investment horizon and timeline. If you're buying, like I just said before, for a portfolio that, if you just want to buy large cap tech stocks that you think are going to develop more, Apple shouldn't matter. The price of Apple should not matter right now to you. It doesn't matter if you're holding it for years. It doesn't matter what happens next week or in the day. But if you're a day trader, if you're a swing trader, yes, the price of the stock does matter, because you're trading for an entry point and an exit point. And we'll talk about that in another video. But
yeah, and I just want to go quick in. I want to make an entire video. We will talk about the entire topic of options in a separate video. But this strategy is something that I do want to talk about, and how you can leverage so many shares for potentially a cheaper price than just one share of that one company. And I'll give you an example of that right now. Yeah. Amazon is $3,000 a share right now.
Amazon right now.
Okay. You're not going to want to buy one share of that company.
$3,380.
Okay, so yeah, we're $3,400 for one share of Amazon. Okay, an option contract for Amazon could potentially be, I don't know what it would be exactly, but potentially it would be one option contract would be 100 shares of Amazon for less than $3,000, which is the price of one share. And that gives you that leverage of having 100 shares of Amazon.
So it's as if you bought $300,000 worth of Amazon stock with $200.
Potentially, yeah.
Potentially, or depending on the options.
Yeah,
stuff.
and that's what and we're gonna get into details about that, but that's what we're saying. Like, if anyone can afford a stock with your budget and with buying power that you have, no matter what, depending on a strategy that you use, which would be potentially an option play.
I think you hit the nail right on the head by saying that it's that, especially in this time of investing. It's amazing. You used to have a broker. You first have had, if you want to buy a stock of a company, you had to have that amount of money to buy it, and you had to call someone to buy it. There was no really other options. Now you can short sell, you can go long, you can go short, you can trade options, you can trade margins. Like, you can buy partial shares. Like, I don't buy partial shares, but you can buy partial shares, just as you can buy partial shares of partial of Bitcoin, whatever, crypto. Same thing applies to stocks. There's no excuse, especially for a long-term investor, to not be in the great companies already. You can be in it. I mean, for me personally, I own a Tesla share, and then I own other partial shares of Tesla, as well as a variety of ETFs and indexes. There's no excuse for
Totally.
people to say, oh, it's too expensive for me.
Fractional shares, that's a great point you brought up.
Yeah.
Options was a strategy. Fractional shares is another strategy if you can't afford to buy a larger quantity of shares for that company. Now, buying a fractional share of something like Tesla or potentially like Bitcoin, something that's very, very expensive, and you want to be able to buy 0.03 shares of Tesla or whatever, to match whatever price range that you are working in. And that allows you to get in and at least make some kind of profit off of these companies until you can get more buying power, and then maybe work your way up to buying a full share, and then another share, and then keep going from there. And there's just so many ways to be able to afford an expensive stock. If
Expensive in quotes.
If the company, it doesn't. The whole point of this video is that it doesn't really matter, and expensive versus cheap. This in the stock world does not exist.
There's like always a way for you to get the stock you want.
Exactly.
And in a variety of different ways. Options, you have to tread lightly if you don't understand risk. I mean, it's better to start trading other types of stocks that are low cap and understand trading stocks itself than going into options, because options can be confusing if you don't understand it. And we'll have a whole video explaining entry points and exit points and options, so you guys, the listeners and the watchers, can really understand what we're talking about.
I really think it's a cheat code. Once you figure it out, it's a cheat code to the stock market.
It is, because you're able to buy large quantity of large cap, huge cap stocks for less than the price of what you're paying for one stock, and you're buying 100 of them. So you're very volatile, but you can go up a shit ton and you can go down a shit ton.
Yeah, that just it is volatile. Like you make everything is multiplied by 100. When it goes up 30 cents, if the stock goes up 30 cents, you're gonna multiply that times 100, and you're gonna make 100 times the profit just based on that little change.
Yeah, but in those specific situations, though, when we say the price shouldn't matter, the price for an option actually very much matters, because you're trading on what the price will be in a short amount of time. However, what we mean the price doesn't matter is it shouldn't matter for you to actually buy the stock. Oh, you can't make excuses why you shouldn't buy into these companies.
Yeah, it's like is that
kind of what you're saying?
Yeah, an option contract has its own separate.
Because obviously,
price.
if you want to buy a full share of Tesla, you have to have the amount of money. But it's more about not closing yourself off and being intimidated because of a stock price being too high for your standards.
Yes.
Obviously, you can trade low cap and mid cap growth stocks. That's what I love doing. That's what Julian loves doing. It's just easier for the enterprising beginning investor like us and a lot of you guys watching this. But it's important to not shy away from these big companies that are making great. They're the companies that what we're betting these growth stocks are gonna be. In the long run, that price doesn't matter. I read a book, the Intelligent Investor by Benjamin Graham, and he talks about how the stock price really should matter. You should be able to if you're a long-term investor, you should look at the value of the company, and you shouldn't even be allowed to see the price of what it is now. You just buy it, and then you lock it away in a safe for 20 years, because really the value of a company, the actual stock price you're seeing, like right now, $3,388 right now. Amazon, in my opinion, is going to be worth this, the actual book value of this, in 3 years. Right now, it's not worth $3,388, right? Or it just went down $1. But the point is, it will be worth that in 2.5 years, 3 years. Right now, it's worth maybe $1,200. But that's why the price of stocks you see doesn't matter. They don't.
I like that. If there was a system where they didn't even show the stock price,
that would be crazy.
It was just it was just the company, and then you'd buy in and buy on. That's how it it should be, because I think that's how it should be, and stock prices is what really scares people away from buying into these companies and missing out on.
Well, that's what I
the
think
growth
takes people out of the stock market entirely, is stock prices. Like, I don't even have $20 to buy a lunch. Why would I even buy $20 of a stock that I'm not even gonna make money on? There's all these excuses because it's too much for them, but they don't. It's a misconception of the principles of what you're doing.
Yes.
And that's the big takeaway from this. What we're giving you guys is the value of the market and what stocks should be doesn't really matter in the long run. In the long run, grand scheme of things, prices shouldn't matter to you. You can have a portfolio of these short term, your day trading and your swing trading. You can use all these principles. The price does matter. But if you're just buying and holding, I mean, a lot of these companies, like for example, my favorite, this is not a plug, but kind of a plug for a company like Jumia, $43. I think their valuation is going to be huge. I don't mind paying for hundreds of the shares now. Lock it away, put it in a safe. I don't want to need to see it for 5 years. You know, that's why $43. It can be $80 tomorrow. It doesn't matter to me in the short run, but in the long run, it doesn't matter. You know, it really that's why you shouldn't shy away as an investor. So you might be like, okay, great, this is a great principle. I want to get into it. Julian, what are some examples of prices when it doesn't matter? Like, what are some companies you like? Like,
I would say, you know, Amazon, you know, Apple, and I'm a really big options guy. You know, I really love the idea of, you know, not really spending an absurd amount of money on all these shares and having 100 shares for a cheap price. But you know, Apple, Microsoft, Nvidia. I talked about Amazon. Square is a great company.
Yeah.
AMD is a great company. You know, all these companies are all over $50 a share, but I would never once, like, I view them all as the same price as in my own head. Like, it's hard to explain that, but I don't see that as, like Nvidia is almost $500 and AMD is not even $100. Like, that doesn't matter in my head. You know, it's these companies have insane potential in the future, and that's all I'm looking at.
Yeah, and
that's all you should look at.
It all goes back to that point of the stock price now doesn't reflect what it's actually worth now. It's BS. It isn't. They're all worth way less than they are what they're paying for now. So what you could do is what value investors do is they wait for a huge drop in the market, they buy a whole bunch, and then in the long run, they're making lots and lots of money because they know the value of what a company is. But also, you got to keep in mind, if it's worth a lot now, you know, it's going to be worth a lot more in the future. It really will, a lot of these companies, you know. But it's important to keep in mind, though, to an extreme, you don't want to be buying things that are ridiculously overpriced for what they actually are. It's all about you doing your due diligence in certain situations. But the companies that Julian listed off, I think, are all great examples of, in my opinion, AMD is super undervalued, in my opinion.
It's undervalued to us, but to most people starting on the market, they see a $90 price, and they're like,
bro, that's my whole portfolio. I'm just trying to buy some penny stocks, dude, and we get that. We understand that. But in the grand scheme of things, you know, those companies like that, it's all about understanding your investment horizon and understanding the market as a whole. And I really recommend a book. This is a book that I don't know if you read a little bit of it, but it's like The Intelligent Investor by Ben Graham. It's a little bit of an archaic book. It's pretty kind of old, but it has all the good principles on like just being honestly a good investor of all types, specifically in the stock market. But you really learn like the idea of stock prices don't matter. They really don't, and that's our big mission to you guys.
But next video and in a couple of videos down the line, we're going to be going over details about options and how that actually works, because I really do think that everyone should have an understanding of that strategy, because it's right there, and most people, even if they're just buying stocks, they don't understand it enough to actually use it to their advantage. But we're going to definitely make a video about that in the future.
Without a doubt. But yeah, no, and what I want to bring in right now is a little bit of segue and transition, and it's a company. Every week we're going to try to bring in like a stock of the town, like it plays on the words and like talk of the town.
Stock of the town.
But it's kind of like I'll bring in a stock and I'll kind of talk about it that I'm researching that I kind of like. And it's not really the companies that we might be invested in or we might be looking to invest in. It's kind of a mix of things. Like we might be talking about, like for example, if we were doing this when GameStop was popping off, we'd choose GameStop and just talk about our thoughts on GameStop and whatever it might be. So I might bring in something. Julian might bring in something. We might both want to talk about something. But this week I'm bringing in a stock. Julian, do you know this company at all?
I have not heard of it, so I'm learning.
So it's called Nautilus. All right, it's NLS. It's stock price is $16 right now. And what they do is the Paleoton machines, kind of like it was huge for this past year because of at-home workouts. Like it's like the gym thing where you sit on the bike and you're riding, and it has like that a woman telling you where to go, and like that's basically what they do. They make at-home gym equipment, and it has a huge rise. It was literally like $2 a share, and it went to up to $40. Just off of like 7 months, because the earnings were ridiculous, because so many people, gyms were closed, they had to buy things at home. Now they took a huge tumble just because of the vaccines and the amount of reopening, because gyms are open and people will be like, well, what's the point of buying at home gym workout if I can go work out at the gym? So it went from $35, now it's down. It was bent down to $12. Now it went way back up to $16. But the point of what I'm saying is, here's why stock price doesn't matter. Here's what I'll tell you. I think the home gym scene has changed forever. I think the
agree
home gym.
100%.
For example, like we have a friend named Benji. Benji used to go to the gym all the time. He re-renovated his whole garage. It's a home gym now, and he doesn't have any intention of going to the gym again.
Because everything is at his disposal, right?
He already bought it. And what's he going to keep doing? He's going to keep buying at-home gym equipment stuff because has an at-home gym. And I think that's true for so many Americans, people around the world. Like, Julian, what do you think of that?
Yeah, no, I honestly, I think that's insane because, I've been trying to buy, stuff for a home gym. I go to a gym, but I think that's,
do you think slowly but surely you're going to make your own
I think everyone, and if they have the money to, and they realize that, like, I can spend this amount of money up front and just have a setup in my garage that can hit every exercise that I want at the gym, I'm going to probably do that. And I haven't heard of any companies that, are specializing in at-home setups.
Nautilus is like the Nike, the Adidas of at-home stuff. It's a name brand. You see Nautilus equipment, it's a name stuff, and they have great products. And I don't see them going away. I think the fact that they dropped so much because people think, well, people are just gonna go back to the gym. That's the short-term sentiment. The long-term sentiment is you know what? People aren't going back to the gym. I'll tell you, I go to 24-hour fitness, and their numbers are super low. I talk to the front desk, their numbers are low. People are actually staying at home, doing at-home workouts because they bought so much from Walmart and Costco and Nautilus. Nautilus is the big at-home gym. So I think, and their earnings are incredible. They're cash generative. I think this is a great buy. I have them in my portfolio. But yeah, I just want to share it with you.
Yeah, no, I think that's a great company.
Yeah, take a look at it, and that's kind of what we're gonna do every week. Just kind of like the stock of the town, like the talk of the town, play on words there. But yeah, it's NLS. You can check them out. I think our price target's $25 to $30, and they're at $16 now, so there's some good upside. But great, they're a great long-term hold, in my opinion. I love them, but yeah, that does it for me.
Yeah, I think that our stock picks are going to be changing a little bit more because we're going to try to shift away from picking stocks that everyone knows about that have been around for a while that just are selling off and spiking at different times. We're kind of staying away from that, and we're kind of just wanting to do some more research on our own and finding that next early company that is starting out, either IPOing or new technology, some modern day company that has potential to grow, and that's what we're going to be just talking about. That's the stock of the town.
Because we were talking about it right before we were walking into the office to do the podcast, and we were like, we were just bringing up like Tattoo Chef and Tesla and
Apple,
and NEO
Tesla.
like every week. Like, yeah, those are companies that we really believe in the long run, but I'm not just going to keep saying them every podcast. Like, we might make one video where we're going to talk about our great picks for the future, but that's going to be it, because we want to bring in companies that we might be in, we might not be in. It might be a terrible company and talk about why the company is bad.
Yeah.
Like, for example, like not just the great companies, but the good, bad, and the ugly.
It's just their watch list companies. We're going to talk about them, and we're adding them into our watch list, and we won't make any entries unless we see some kind of confirmation. But that's what we're going to be taking that in that direction, and hopefully we can share some really good companies that we find.
Without a doubt. Guys, thank you so much for watching. If you're watching, if you're listening, thank you so much for listening. Guys, take care. This has been Lucas.
It's been Julian.
Take care. Peace out.
Peace out.